Hello and welcome to Fin Business. We are in midst of some very interesting conversations in the area of corporate banking and transaction banking. With me, I have the global head of banking and financial services practice, Shekhar Mullatti from Aurionpro, and we are going to talk in detail about what is happening in the transaction banking scenario globally in different parts of the world as well as in the emerging markets. Hello, Shekhar. Welcome to Fin Business.
Hi, Babu. Thanks for having me here.
Thank you. So, Shekhar, you have been doing business with the transaction banking heads across the world, with the corporate banking heads across the world. If I will like to ask you, what has been your experience in the way the market is moving for the transaction banking business and the corporate banking business, and what kind of technology role is there in this segment? From the developed countries perspective, Singapore kind of countries where you are anyways deeply entrenched, and the other in the emerging markets.
That's a great question. It's also a very big question.
Very big question.
So transaction banking, right, as the name says, is really about transactions, payments, collections. So in today's world, to make that happen effectively, you have to have technology. And the kind of technology that our customers expect and banks expect today is, number one, things which are robust, reliable, can switch across countries, can switch across currencies, and is easy to use, right? And that's really been the focus and our philosophy when we have built our capabilities as well, right? Because if we are able to, enable them to meet their marketplace, we can also achieve our objectives, in the process. So some things, for example, right, the back end of most banks tends to be very, very cumbersome. And traditionally, banks don't invest on the corporate banking side of the business from a technology perspective. The bulk of the investments go on the retail banking side because your customers are so widely dispersed. But today, corporate banking business per se is very widely dispersed as well. Every corporate customer has global aspirations, or at least multi-country aspirations. So being able to get all of that, get the payments through, get the right MIS, and be able to do it quickly and easily, that's really the experience that bankers expect and customers of bankers expect today.
Interesting. And how has been the journey in the emerging markets for this?
So the emerging markets are trying to do two things, right? One is they are trying to, of course, emulate the developing markets from a regulations, from a security, from a governance, best practice perspective. From a technology perspective, they're trying to leapfrog, right?
Okay.
And things like AI is a good example where the cost of entry of AI is very low compared to them having to build that humongous back-end infrastructure that the developed country banks have built, right? So they're saying, how can we take this to make smarter decisions for our customers? So we are seeing that as one of the huge opportunities in the emerging markets. We're seeing the use of intelligent dashboarding, right? When my customer wants to approve a set of payments, for example, right? How decentralized can it be, right? Without compromising any of the security and policy guidelines. It's striking that balance together. That's where the emerging markets are trying to go.
Interesting. So you already touched upon things like artificial intelligence. You talked about things which are emerging in most of these markets. If we deep dive a little bit down into the technologies that are going to have bigger impact into the automation of the corporate banking or transaction banking and stuff like that, what are those key technologies that are going to drive the directions for adoption of technology in the transaction banking sector, right from experience building to that of efficiency?
So when it comes to new technologies, right, there tend to be the jargons, and then there tend to be the things which are actually working.
Ground realities.
The ground realities, right? But good ground realities. Right? We touched upon AI, and AI is really about how effectively you capture the data, you use the data to progressively learn so that you get the automated decision making to help or augment the manual decision making, right? So that's one set of the journey. The other is today, the world is more and more interconnected. So how do we seamlessly integrate with each other and get capabilities, right? So for example, if you are a bank, today you might want to originate your customers by going and talking to them like this. Tomorrow you say, no, hey, Alibaba, that supplier is on that Alibaba platform. Let me just go plug into the platform and get them directly from there. So how easily and seamlessly can I talk then to the Alibaba platform? So when he's out there purchasing maybe, his next month's shipments, he can see that he can link with this bank straight through and the data is already there, right? And the transaction can be processed. So that whole ecosystem collaboration is another new technology which is real, and we're seeing it in practice today. On the flip side, there are things like blockchain, which a friend told me that it's really a solution looking for a problem. It's a lot of banks have invested a lot, but we don't really see that getting practical applicability in the real world today.
So if you see the emerging world, there are a lot of problems that happen, especially with the kind of frauds that take place, security related issues, or willful frauds due to wrong lending decisions and stuff. How strongly, or what kind of impact can technology play to reduce the kind of risks for this kind of lending?
I think India is a great case study for this, right? If you see on the wholesale banking side, the wrong lending happens for a few reasons, and you actually touched upon them. First, it's difficult for the lender to actually know who he or she is lending to, because one corporate can have 100, 200, 300 group entities. They're all kind of linked here and there. So who is my obligor is a very difficult question to answer. And today there is technology that's available to put that together in a very easy way to people see. The second is, how do you make that credit decision where you're balancing the policies of the bank and keeping record of why you've made those decisions for yourself and also for auditors in the future, right? How do you capture it? How do you snapshot it? How you audit it? How you report it to the regulators, right? Also a very murky area where today technology is available in some of the more developed countries. And I think if you put these two together, right, then the bankers of India will have the tool set to make more informed decisions and be able to stand with them with confidence as to why they made those decisions.
That's a great thing, considering the facts that most of the emerging economies face these kind of problems, especially which affects their balance sheet and brings down the banks standing, or probably the banking standing in throughout the country in various countries. So just going ahead, which are the top areas where the future of transaction banking is heading towards in your perspective, especially with a global perspective in mind?
Right now, I think it's on a very nice trajectory, right, towards using better data, better using these ecosystems with underlying very robust and reliable processing engines. So this trend, I actually see it continuing and proliferating over the next 3 to 5 years. And, because this is the second round of adoption of this technology. And once it's there, then payments everywhere is going to be just instantaneous. It no longer becomes a competitive advantage for any business segment, any business, in any bank or any country. Then your product really starts making the difference.
You just touched upon payments. Immediate payments has become a reality globally now, with the US also getting into immediate payments bandwagon in the recent past. Of course, India was always into this for quite some time. What are the benefits that transaction banking can benefit out of all these, instant payments with respect to maybe a supply chain financing or any of those kind of areas that comes to your mind?
Well, regulators are trying throughout the world, right? Traditionally, bigger corporates have had the advantage over SMEs because they get payments faster.
Yeah.
Throughout the supply chain, they're able to negotiate better terms and they get the money first. Whereas the small companies who actually need the money faster, they struggle, right? Because their payment and their supply chain is so inefficient. With these instant payments, right, regulators across the world are trying to remove this advantage that the big corporates have and make it a level playing field for all kinds of corporates. Which is why globally you see the emergence of the SMEs, the challengers, is proliferating everywhere. Today you ask the CEO of a large bank, what do they really fear? They don't say they fear another big bank. They fear 100,000 mosquitoes will come and attack them, and they won't be able to withstand that. That's really how the corporate scenario is evolving, and that's where we see it going.
Fantastic. Thank you very much for an interesting conversation. We will have more of this in our series on corporate banking later, and we look forward to more and more interesting perspectives from you. Thank you very much, Shekhar.
Thank you, Babu. It was a pleasure.
Thanks.